So good morning, managements, analysts, bankers, investors, and our distinguished guest. On behalf of Thai Union Group, I would like to welcome you to our third analyst meeting of 2022 for our quarter two result announcement. My name is Pimthep Phakthongpan and I am the MC for this event. So I hope you have enjoyed our mini breakfast and taste some of our innovation products during the registration period. As a leading tuna producer for more than 40 years, today we proudly present to you our innovative products, starting from the plant-based tuna and our very newly launched product, the plant-based shrimp. So this product is suitable for everybody, especially those who are flexitarian and who has shrimp allergies. Our OMG Meat brand, which I'm sure a lot of you are familiar with, have just launched the shrimp dumpling that's made from alternative protein. And also, additionally, you also probably have seen, we also have product showcase of Select X Doraemon with limited edition that was extremely successful last year. So this year we bring to you more with all the Doraemon 5 characters. So our product now is not only tasty and nutritious, it's also collectible as well. Now that I have told you about our products, I would like to take this opportunity to introduce you to two of our new joiners. So last quarter, we have two IR team that joined our Thai Union family today. So today you will meet our IR manager, Kun Rattinan Wongwatcharanont or Kun Gigi ค่ะ
ค่ะ สวัสดีค่ะ
And our IR team, Kun Pimchanok Nok Noi. Some of you might recognize her. She was with Thai Union a few years back, and now she just rejoined. I think maybe she's still outside. She can come and introduce to you later when she's back. So without further ado, let's move on to our Thai Union Group performance announcement. So our key speakers are our President and CEO, Mr. Thiraphong Chansiri. Yeah, so as usual, he will walk you through the key highlights and recent development, and followed by our Group CFO, Mr. Ludovic Garnier. And he will walk you through the consolidated results. And our Investor Relation Manager, Kun Gigi, will also walk you through the business performance by business unit.
สวัสดีค่ะ
As this session will take around 1.5 hours, including the Q&A, we will then follow by 15 minutes break and continue with TFM result announcement and lunch. This session also is hosted both in physical and online meeting via Zoom. And it also has both Thai and English interpretation. So for those who are joining us online, please click mute original audio for English interpretation and unmute when Kun Ludo speaks. So without further ado, I would like to invite Kun Thiraphong Chansiri to begin the result announcement.
Thank you. Good morning to all of the analysts. We're happy to present our earning results for the second quarter. The highlights for the second quarter include our sales that still continue to be high, and they are at all-time high year on year. And this is mostly due to our higher selling prices. As we informed you before, we have been raising our selling prices to match inflation as well as our investment costs. And we have favorable effects as well, and demand is robust. So we'd like you all to rest assured that our core business is doing very well. In terms of sales, if you take a look, the key engine for us, the key growth engine, is our pet care and value-added sector, which grew by 41.7% year on year. And part of this was partially due to a logistics delay, which we faced in quarter one, causing our costs there to increase in quarter two. Our ambient seafood continues to grow at 10.7% year on year. And in terms of our frozen products in Thailand, we're still doing well, but the overall picture has dropped by 6.5%, year-on-year, mostly because of the chicken of the sea, frozen foods in the U.S. We faced issues in terms of inventory that were high at the beginning of the year, and also costs that were high as well. It was mostly due to lobster and crab, whose prices dropped over the past period. And this is due to the economy in the U.S. that has weakened. The higher priced products have also been affected due to that. And this is why we've seen a drop in our frozen foods overall. In our gross profit margin, it is at 16.9%. And we have accounted for our one-time item, the restructuring for Rügen fish. Our operating profit has declined mostly because of the freight costs and also the restructuring cost. We closed the factory in Germany, and we streamlined our operations in Europe as well to improve them. Our net profit, the adjusted net profit, went down by only 12%, and this is mostly because of our non-cash one-time item, our preferred shares in Red Lobster, and Ludovic will be speaking about this later. We had increased interest cost, which required us to adjust our value. And we also have the restructuring costs for Rügen fish, the plant in Germany. On the next page, we'd like you to take a look at the adjusted net profit, as well as our margin, and you'll see that our one-time expenses, in terms of our net profit for our core businesses, we're still at 2.2 billion baht, which has decreased from the year before. But the 2.4 billion baht that we achieved in the last year, the second quarter of last year, was exceptional performance. Our net margin is still at a very acceptable level as well. For the first half of this year, you'll see that our sales grew by 12.3%. And there's no need to look at the share price because there's nothing exciting in that regard. Our net debt to equity increased just a bit to 1.09 times. The main reason for this is that the second quarter we paid out our dividends, and we have working capital that is also high. And in terms of working capital, it's mostly from the inventory, and we will reduce this this will be reduced in the third quarter and fourth quarter. So this is the overall picture. We approved the dividend payment yesterday, and this is an interim dividend of 0.4 baht per share. The dividend yield this year is about 5%. And on the next page, if we compare ourselves to our 2025 targets, I believe that we are on a path towards achieving these targets. If we look at EBITDA, which we set at 450 to 550 million US dollars, last year we were at about 470 million US dollars, and if we include the Red Lobster effects, then today we're at about over 500 million US dollars. In 2025, we believe that we will be able to achieve our goals. In terms of growth of 3%, you'll see that right now, from the prices that have been increased, the selling prices have been increased, we have therefore exceeded our goals. And our productivity, our conversion costs, we've done well in those respects as well. We have automation, we have IT, and we continue to move forward. And we also have a factory closure as well, but this is in terms of our operations and supply chain management to improve all of it. our revenue from innovation of 10%, I believe that we are very confident in this respect. This is a target of our group. We are monitoring this closely, and we have innovation investment as well. We have a plan to set up an innovation hub in Europe, in the Netherlands. It will not require much in terms of investment, and we will allow the party on that side to handle our branded ambient seafood. It's closer to the market, and they will work with GIC here in Thailand. As for turnaround or divest loss-making businesses, we continue on this front as well. We have closed the Rügen factory, and before that we closed the Chu Salmon factory in Poland, and we closed businesses in the Middle East as well. And what has caused all of the losses, we are dealing with those businesses that are causing loss, divesting them. And this has allowed us to manage things financially stronger. And 5 years ahead, we will be investing in new businesses. Next year, you will start to see our culinary factory for ready meals. It will be ready for operation. We also have a protein plant for collagen peptide as well. We'll start next year as well. We have a protein plant and pet care and feed capacity as well. Our pet care factory, the new factory, will be completed at the end of this year, and operations will begin next year. So you will see many new developments in the next year from Thai Union. As for our pet care and feed that has grown at 3 times of our GDP growth, we want to see double-digit numbers. That is our plan. We are targeting 12 to 15% in the next few years, and we plan to maintain our margin at a high level. And in terms of pet care, they have an innovation center of their own, and they are ready. The executives are ready, and their strategies are in place, and they are on their way to being placed in the stock exchange. Let's take a look at commodity costs. If the situation improves, the commodity prices will decrease, and the related businesses will begin to normalize. And this is what I'd like to update you on. In addition to this, we're looking at scaling up our culinary and ingredients business. As I mentioned, our factories will be ready for operation next year. And by 2025, our new businesses will contribute more than 1/3 of EBITDA. And we have a high margin for pet care and packaging as well, and strong growth. We are very confident in our packaging, whether it's in our can production, and also our printing facilities. We have achieved wonderful results in that regard, and this will improve our margin. In addition to this will be the first time that our cans will be exported abroad. We will be producing for Seychelles. That will be the first place, and we believe that it will begin next year. Right now, we are ending our contracts with our suppliers in Seychelles for canning. Our commitment to sea change continues on, and we are adding climate change to the roster. We're going to deal with goals in that regard, and we are going to announce our neutral carbon footprint commitment by the year 2050. We have sustainable packaging commitments We will achieve 80% by the year 2025. That's our target. We don't see any problems in achieving that goal. Our sustainability-linked financing continues as well. We have 2 billion baht in blue finance loan and a 6 billion baht sustainability-linked bond, which we have already completed. And we continue in sustainability-linked financing. We don't have any need to raise funds at this moment because we do not have any significant expenditure plans. And we're going to drive our synergies and profit contributions forward. We have a joint venture in India with RBF, and we have Mara, a new startup in Canada, which has allowed us to expand our business from producing tuna oil and moving into algae oil as well. And this is where we're looking at a possible synergy. And on the next page, you can see we have new products that we're launching. And this is part of our innovation so that we can achieve our 10% goal. And you'll see that we have new products in every market in the U.S. Our Chicken of the Sea brand is adjusting its business. It's getting better. Even though the growth is not that significant yet, the sales are at about $400 million, and we were targeting $500 million, and we're looking at greater profit as well. In the U.S., we're looking at our portfolio, not just Chicken of the Sea. We are going to manage our portfolio, especially in terms of our premium products, whether it's Genova, which focuses on Italian flavors. We have Kiosker as well, which is doing well. And in Europe, we have Petit Navire, which is a mackerel fillet. We've launched a mackerel fillet in olive oil. We have Label Rouge, which are premium sardines, and we're expanding our sardine market share. And we have ready-to-eat items as well. As you can see on the left, we have Harvesta, which is a tuna and herring product. We have Bruken Fish, which has also launched a new product, and also Select. On the next page, I'd like you to take a look at this company, which will be presenting on their own later once they are successfully spinned off and registered on the Stock Exchange of Thailand. Our vision for iTail is to become a world-leading pet-centric company. Everything that has to do with pets, whether it's pet food, pet snacks, pet treats, pet supplements, and so forth. We aim to be a leading OEM for pet food and strategic partners with leading brands around the world and also in Thailand. iTail is not something that we have just started. We have been in this business for over 40 years, and you can see that our size and our revenue is about $500 million. Everyone wants to enter this market. There is no company that is as large as us. There is no company that has invested in terms of innovation as much as we have. There is no company that has emphasized full nutrition for pets as we have. And there is no company that has invested in every stage of life of pets. We have from food for young pets to older pets to elderly pets. We have functional food for pets as well. So this is one of our key strengths, and we are focusing on premium web-based products mostly, and our materials include seafood and chicken, So this again is a key strength of ours. On the next page, let's have a look at algae-based oil. For your understanding, we have invested 10 million Canadian dollars, which was part of the growth funding round, and it allowed us a one seat in the board. And it is one of the world's leading producers of algae-based bioproducts, and it's in Newfoundland of Canada. There is a factory that is producing in Liverpool in England, and we're inviting them to set up a factory in Thailand in the future. And this is a vegan plant-based option, DHA-rich in omega-3 fatty acids. Some countries don't want oil that comes from animals, and this will be an option for our partners who are looking for vegan plant-based options, and this will allow us to have a more comprehensive business service. Our oil refinery in Germany, we're leveraging these. We have fully refined oil, tuna. We're also looking at fully refined algae oil in Germany. And we're going to expand our ingredients, whether it's bone powder or collagen. This is our plan in terms of ingredients that we have been pursuing for the past 4 to 5 years. On the next page, we have Z-Vita. This is our B2C supplement, which is under Thai Union Life Science. 1 year has passed, and we are now number 1 in terms of collagen in super hypermarkets and chain. This does not include the online business. If it's online we need to hire a celebrity to be able to compete with the other brands online. And we're looking at extension in fish oil and collagen. We are on our way to achieving our 1 billion Thai baht target within the year 2025 and 200 million Thai baht of sales in 2022. We are an exclusive partner with Watson all over Thailand, and perhaps you'll have the opportunity to go out and take a look at that. So we're very excited about launching these new products. And on the next page, we have alternative protein. We have launched in the second quarter our shrimp wonton, and we are emphasizing on our alternative seafood expertise. And we expect it to grow by 20% annual growth rate until 2025. Our plant-based meat, the U.S. market is 5.2 billion, and we expect things to grow to 1.2 billion US dollars. That's the market opportunity. We continue to build our expertise in this regard. In terms of sustainability, there isn't much to report. We released our first ever report for 2021. We released the 2021 sustainability report, and we have been recognized as a leader in terms of sustainability in the seafood industry. And on the next page, this is about protecting nature and supporting local communities. And this is part of our vision, which is healthy living, healthy oceans. So we held a global coastal cleanup, and we've donated items to the community. In terms of our awards, of course, every meeting, we report on the awards that we receive. We continue to receive awards. The key highlights are our outstanding company and the business magazine, Best CEO from the Institutional Investor, Best CFO, Best ESG, Treasurer of the Year, Best IR Team. So we'd like to thank everyone for your support that you've given all along. And I would now like to hand things over to Ludovic to discuss the financial results.
Thanks a lot. I'm very happy to be with you today. So here, just for you, the key highlights. I think for Q2, you heard already Kunturapong, but I just wanted to summarize them. I think first of all, we are all very happy with the sales. The top line is all-time high for us, very close to 39 billion baht. Kunjiji will elaborate where did it come from, but the key components are really coming from the very impressive growth coming from the pet care, value-added, and also the ambient performance is also very strong, and the frozen business is normalizing. Of course, we are also benefiting from a positive FX, but even if you remove this one, the growth is still very, very impressive. The gross profit in absolute amount is also very nice. We have a bit of a dilution in terms of gross profit margin at 16.9%. We have some one-off impacting this one. I will elaborate a bit further on this one, but overall, we are happy, and I think we believe it's a healthy gross profit. We have two specific one-off. Kunturapong mentioned this one. I will elaborate in the next slide on this one. The impact are quite significant, but if you look at the adjusted net profit, if you do remove the impact of these two one-off, then the net profit stands at 2.2 billion baht. 2.2 is very close to 2.4. 2.4 is the adjusted net profit we performed last year in Q2, which was all-time high. Okay, and this is why we do believe that our performance this quarter is very strong. Of course, we have these two one-off, but we do believe the underlying business is doing extremely good. Pet care and value-added, we just want to highlight the growth again. Over the last 2 years, the performance has been really exceptional on this one, and I think we all have to acknowledge this one. And they're achieving a very high performance in terms of sales and also keeping the same level of profitability. So this is kind of unique, and this has to be highlighted. Moving on to the next one. So this is our long-term story in terms of sales and gross profit margin. You know that we enjoyed really this chart. You have seen the top-line performance over the last 10, 11 quarters in a row has been very impressive. The gross profit also has been declining. Margin has been declining a bit in Q1 and in Q2. We cannot deny that we are facing some challenges from the inflation. However, we are still around the 17.5, 17.4% once you remove the one-off. So we do believe we are doing extremely well. We do believe we will improve further in Q3 and in Q4. Just wanted to spend a bit of time, and you have here the whole P&L. We have two one-off to report this quarter. Okay, the first one is impacting our operating profit, and we did announce early in May that we will close one Rügen fish factory. Right now in this group, we have 3 factories, 2 in Germany and 1 in Lithuania. So the idea is to close one of the factory and to transfer all the production from one German factory to another German factory. So we will not lose any business from this one. The idea is the volumes were not big enough for these 2 factories. So the idea is to improve the efficiency by concentrating all the volumes in one factory. The impact is 274 million baht. These are for the restructuring costs happening in Germany. We have to split this amount between the line cost and SG&A because you have some people related to production and some people related to administrative tasks. This is why we have to split this amount. But the 274 is only related to the closure of one factory. The second significant impact that we have is impacting the line other income for 564 million baht. We talk really a lot about this one, and I will elaborate a bit further. Also on this one, this is the fair value adjustment on the Red Lobster preferred shares. Both of them combined have an impact on our EBIT of 838 million baht. Of course, for both items, we have some tax impacts, which are partially offsetting this one for an amount of 219. So to combine the net impact on our net profit of these two one-off is 619. And this is why our reported net profit amount to 1.6 billion baht and our adjusted net profit amount to 2.2. 2.2, it means we are achieving a 5.8% margin in terms of net profit, which is very high for us. We are still facing with a lot of inflation. It's not a new story, I think, since Q4 last year. We told you there will be a lot of inflation impacting us in 2022, of course, because of the war between Ukraine and Russia. The impact are a bit higher compared to expectation. A few topics on this one. The first one is on the logistic costs. The logistic costs are very high since 1.5 years now. We could see a bit of sign of improvement. The price of a container from Thailand to the US start to decline a bit. The lead time also between Asia and the US is also improving a bit. Yet, We still have a large impact from the pricing, a large pricing impact from the logistic costs. You can see here over 6 months we have an impact by 1.3 billion baht. In Q1 it was 700. In Q2 it's 560 million baht. Last year we had a price impact of 400 million baht. So it means that in 2 years we had an impact of 1.7 billion baht on the logistic cost only for the first 6 months. Okay, it's a huge impact. It's not new. We know this one, but just to remind you that we have this big impact. Also on the right, you can see we are still facing with the inflation on the packaging, ingredients, utilities, really in the US, in Europe, and in Asia are really increasing. We can see some sign of improvement for some of the topics, like in packaging. So the steel price is going down a bit on this one, but some other utilities like the coal, like the fuel are still very high, okay? So how do we face with this one? Of course, one of the first action is to increase the prices. Kuntirapong mentioned this one already. We have been very active on this side. We want to have to increase the prices. Of course, we're not the only one in this situation. Everyone right now, every industry, and the food industry especially, is increasing the prices, okay? So we did increase our prices. Of course, sometimes we have a bit of time lag between the cost increase and the price increase, but overall we have been quite happy with the output of the price negotiation in 2022. The second one is mostly related to our branded business, okay? So when the price increase that you negotiate is not sufficient to absorb the cost increase, we can always play with another lever, which is the promotion intensity, meaning we can decide to increase or to decrease our promotion, the volume of our promotion, and the intensity also of our promotion. So this is one way also for us to absorb the inflation. The third one, which is very important, is always trying to manage our cost structure. And here the value engineering is very important. What does it mean? It means that you constantly review your spec in your product. Some specs now are becoming very expensive, like the sunflower oil, for instance. And the idea is to try to remove this item, to replace it by something which is a bit less expensive. Of course, some retailers are willing to do that. Some other customers are not willing to do that. Okay? But it's a constant review of our product, trying to remove what is expensive and to replace with something which is cheaper. Automation also has been one of our priorities since a few years already. I think we are going in the right direction. I've been visiting one of our factories in Thailand that I've not visited over the past 2 years. I was very impressed with all the progress we have been doing. A lot of machines everywhere, less people, and I think this is the direction where we have to go. The last thing, of course, is the situation overall. The macroeconomics is very volatile. Okay, so we need to remain very agile. I'm sure there will be some new surprises to happen in Q3 and Q4 regarding the macro environment. We are not terrified because of this one. We believe we can manage this one. And if you look at past track record of the past 2.5 years, I think we have been doing extremely well during this difficult time. Just a quick update on the raw material prices. And if you do remember, in Q1, it was one of the points of concern that you raised, because at that time, during the last months of Q1, the prices of the fish went up to 1,900. Okay, the good news is in Q2, the average fish price, tuna price, has been declining to 1,600. In July, it's quite flat also at 1,600. So we have seen some easiness on this one. It went down even to 1,400. That was not expected. It's a good surprise for us because it means less pressure on the inflation. The shrimp price also has been kind of normalizing. It was a bit high in Q1 22. Now it's back to a level which is a bit more normalized on this one. We are still facing with one issue, which is on the salmon. And you can see here the salmon price on average in Q2 stands at 97 NOK per kg. So this is still extremely high. This is all-time high. And this explains the difficulties we are facing in our chill business in Europe, which is very exposed to the salmon. And also some of our salmon business here also in Thailand. We are not fully exposed on this one. You know, we are doing some hedging on the salmon. This is possible on the salmon. This is not possible on the tuna. So we are kind of protected for a portion of this one, yet we are impacted by this one. And the way to cope with this one is we get some new price increase. So I give you one example. Our chill business in Europe, they are requesting right now the 4th price increase in a row. Okay, so this is a unique situation, but given the fish price, I think there is no choice right now on this one. Moving to the currency, I think the picture is quite good for us. You have seen in Q2, the USD has been increasing versus Thai baht. This is very positive for us. The GBP and the euro have been declining a bit, but overall the FX situation is favorable for us. And now we move to Red Lobster. And maybe I will give a word here Kontirapong, because he just get back from a few weeks in the US. He has been doing a road trip in the US, and I wanted him to share some insights with you.
First of all, I may not have the chance to talk to all of you. I'm not upset with you. Don't worry. I just returned from the U.S. on Friday, and over there, no one was wearing masks, so I'm just trying to stay away from everyone for everyone's safety and peace of mind. After having not had the chance to travel for about 3 years, I started to travel in April. And in April, that was the first time that I traveled to Europe to visit our businesses there and in Africa as well. And I was there for a whole month, so it had been a long while before traveling. And before that, I went to Paris to visit 2 of our factories in Brittany, and I went to see our new factory investment in Iceland. And I also visited our office in Liverpool and Milan, Rostock, which is our tuna oil refinery plant, and also the King Oscar facility. And then on to Portugal, where I saw our facilities there, and in Ghana and Seychelles. And I learned a lot. I had never went to see all of our facilities or offices all at once. So this has helped me have a clearer picture of our management path. We have many opportunities to improve management and make it more effective. And our decision-making will improve and increase in speed. We were able to smoothly manage our Rügen facility issue, and our businesses in Europe, as I mentioned, are going to have more effective management results. And looking at Red Lobster, it's the same. In the past month, in July, because I had a global leadership team meeting in LA, Red Lobster held a conference for their GMs for all 700 branches. They met up in Texas, and so I spent a whole month there visiting their franchises, their shops in Seattle and New York, in LA, Illinois, Missouri, Tennessee, Michigan, Virginia, Washington, D.C., Pennsylvania, Maryland, and then in Texas to join that meeting. And I saw so much. I met the GMs from the 700 branches, and I wanted to understand more about the business, the entire nationwide picture. I went to visit 47 restaurants. I met 16 directors and 47 managers. And over 10 days, I tried the food at Red Lobster 4 meals a day. It was wonderful. It was delicious. And I had the same menu to examine the quality, the service, the cleanliness. Before this, I had never had the chance to do this, and I now have first-hand experience. I know there is a gap. There is more room for improvement, and that's why we have QSC. With quality service cleanliness, we're implementing that. We are training the directors and above, the executives as well. And today, we are training the 700 branches around the nation, and we will end on the 27th of October. The quality of the food will be even better, and this was to awaken that organization. They had never had a high-level executive like me visit with them like this, and so I went again to awaken them. And this is the first time that we made a serious movement to step in. And we had a female executive who resigned in March. And today, we have a representative on the board who is helping to manage, and he has experience. And we have 2 other individuals looking at the operations and the food. And I myself and our management team, we went to visit with them. So the important steps that we took aside from QSC were to look at the organizational culture, the mindset, and before the conference, we weren't very happy with the operations, so we removed 2 layers, the EVP of operations, which was one of the highest-ranking officials looking at the restaurants, and also the vice president of operations, 6 of them. Before this, one of them was taking care of 110 restaurants, and that would be impossible to manage. There's no way you can manage 110 restaurants on your own. So we had these 7 individuals resign. This was 5 days before we went to the conference, and we have 60 to 70 directors, and we promoted 15 of them to have a smaller, take care of a smaller network of restaurants. So that's our idea. Management executives have to be closer to the restaurants themselves. And in Orlando, which is the corporate office, it has to support all of the restaurants, and we want greater speed in terms of implementation, in decision making. So they all understand now that they have to seriously implement these changes, and we want to see results as fast as possible. And we're giving them 2 to 3 months to review how they're going to improve management. And I went to look at 47 restaurants, as I told you, and I can tell you everything about these 47 restaurants. And at the conference itself, I also listened to them giving excuses, for instance, like saying, 400 general managers, GMs, they're restaurant managers, they've only been in this position for less than 3 years. And my response to that was, on my road trip, I met 2 managers for 2 years who were good, and I've met general managers of restaurants who've worked for over 20 years, but they're useless. So someone who's a GM, it doesn't have to do with the time they work in that position. We have to promote them from within the restaurants. And after 12 months, you have to be a very good manager. If that manager is not a good general manager within 12 months' time, then they should not be in that position. So many excuses they were giving. And again, I went to a restaurant. I looked at a restaurant that was 50 years old, or 40 years old, or 30 years old, 20 years old. And I saw a restaurant that was 50 years old that looked better than a restaurant that was 20 years old. So again, it has nothing to do with the time or of the restaurant, how long it's been open, or it's more than that. So I've seen in the Midwest, the restaurants in the Midwest, like in Tennessee, Michigan, and Illinois, they looked better than the restaurants in Seattle or LA. So it has nothing to do with how long the restaurants or the branches have been open. So we went in because we want to change their mindset and their culture, their organizational culture. Before this, their strategies were one size fits all. For the entire nation, one size fits all. But I told them it doesn't have to be one size fits all. I told them that the whole nation is not uniform. They have different kinds of guests. They have their guests have different kinds of requires. Like for instance, in Tennessee, they like fried chicken, and there are other states that require or want healthier foods. So whether it's the CFO, the CMO, the CIO, we want technology in terms of IT to help improve the management and the service. The menu is still a paper menu, for instance, and this makes it difficult to change the the names of menu items or to change the pricing. So we are implementing an application, a mobile app, or perhaps you could use your mobile phone or your tablet, so that our aim is to have an electronic menu which will make management of the menu itself more flexible. So these are the experiences I had while I was there. Our executives continue to work harder than before. We haven't worked this hard for quite some time now, but we are working very, very hard right now to improve the situation. So if you have any questions about that.
Thanks a lot, Mr. Rapong. And now talking about the numbers, you can see here our usual table on this one. You can see on the left, this is Q2 performance. I think for you, there are two key highlights on Red Lobster. The first one is the share of loss from the operations in Q2 amounts to 281. I think this is what we did share a few weeks ago. That was the expectation. It's still a large loss from this one. And the second item impacting the line other income. Usually, if you look at the past quarters, we are always enjoying something between 280 to 300 million baht positive. This year for us, this quarter, it's a negative impact by 300 million baht. And this is purely related to the non-cash one-time adjustment we had on the fair value. And I will elaborate on this one further. Apart from this one, the share of loss from the lease accounting adjustment and the interest expense is kind of stable compared to previous quarters. Income tax, of course, is increasing. We have more tax credit coming from the Lobster because the operating losses and the fair value adjustment also triggers some tax credit for us in the US. You can see also here on the top right our adjusted full year guidance for the Lobster. So we have to acknowledge that after 6 months, we are around 550 million baht in terms of share of loss. So we did increase our forecast guidance for the full year between 900 to 1 billion baht. Okay, so we do expect H2 to be a bit better than H1, but you know there is a strong seasonality within Red Lobster, and you know their Q4 is always loss-making on this one. But right now, our assumption on the operation stands around this 950 million baht for the whole year. Regarding the lease accounting adjustment, we keep it flat compared to previous quarter. So moving on to the fair value preferred shares adjustment. I don't want to go through this one again. I think we went through yesterday, and we did repeat again this one a few weeks ago. Just for you, what you need to keep in mind, the preferred shares and the TFRS, it is considered to be a financial instrument. What does it mean? We have to calculate every quarter the fair value. Okay, and the fair value, one of the key assumptions is the discount rate. And we have been doing this already since a few years. Over the past few years, the interest rates in general and the discount rate have been very stable. Okay, so there was no real volatility coming from this. But of course, the situation changed in Q2, and you can see here on the bottom right, the graph that we have on the interest rate in the US. There was some huge increase by the Fed of the interest rate in the US. Okay, and I think everyone was surprised, first of all, by the war between Ukraine and Russia, and then by the reaction by the Fed facing with the inflation. The inflation is huge in the US, around 9%. So here the Fed is clearly determined to decrease this number. They have been increasing a bit further in July, and we are also expecting to have another increase to happen in H2. Okay, and this is why in Q3 and in Q4, we do expect we will not record any preferred shared interest, not positive and not negative. So it will be a zero for us in Q3 and Q4. Right now, this is our forecast for Q3 and Q4. The impact that we have in Q2, I think it's a one-time impact. Again, it's a non-cash item. We have to record this one to be compliant with the TFRS. And we'll have to follow up also on the changes in the interest rate over the next quarters. We just wanted to give you also some few insights regarding the strategy of Red Lobster. I will not comment all of them, but maybe the key actions, and Khun Thirapong already mentioned some of them. The price increase, I think we have been a bit too slow to increase our prices. If you do remember at the beginning of Q1, we were willing to attract new guest counts, so we did not increase our prices that much in Q1. We were not expecting the Omicron wave to happen. Now we are really increasing our prices. It is happening in Q3, so we do believe that you will see some impact in Q3 and also in our Q4 performance. Talking about the operations, Khun Thirapong mentioned this one. We did many changes. We changed completely the top management of the operation of Red Lobster. Why? Because we want to see many changes happening at Red Lobster. And right now we have been redoing a full training program for all the GM and all the restaurant managers. And I think it was very well received by the managers of the restaurants, who are saying it has been a very long while that we have not received such a training. And I think the key focus is to say, guys, you need to insist on the restaurant being very clean, the execution of the food, the cooking, especially for the fish, is really key. All of this has to be perfectly executed, okay? So we did restart all of that. And of course, we did also some improvement in terms of number of people, number of staff and managers in our restaurants. We told you it was an issue in Q4 last year and in Q1. Now the situation is getting better. Again, we still have some more work to do, but I think we all went to the US, and our feedback overall is quite positive, and we are confident we can turn around the business. I will be quick on Rügen Fish. I already mentioned this one. What you need to keep in mind is, yes, we are closing one factory, but we are just transferring the business, the production from one factory to another factory. So we don't expect to lose any top line, and we do expect to have some positive impact in our bottom line because we do believe it's a right move to increase in terms of efficiency. We have a new CEO, Volker, who joined us at the beginning of May. He will take care of the restructuring of the closure of this factory. The factory is not closed yet. The closure will happen in Q2 2023. Okay, but it was announced to the employees, so that's why we have to record the accrual this year. One quick word also on Meralliance Poland. We told you that we will sell this business, and we sold effectively this business in Q2. It is effective, so we don't have any more assets in our chilled business in Meralliance Poland. Just a quick overview of our net debt. The net debt is increasing a bit in Q2. Gunter mentioned this one, mostly due to the dividend we have been paying in Q2. Our request in terms of change of net working capital has been also increasing a bit. We do expect some improvement to happen in Q3 and in Q4. And if you move to the next slide, you will see the inventories are record high at 52 billion baht. This is very high. Two things on this one. I think, first of all, there was a decision at the end of Q4 last year to say, we see inflation is coming. And one way, of course, for us to mitigate the inflation is to increase our level of inventory. So that was a strategic decision to say, yes, we want to increase our inventories. But in some part of our businesses also, these inventories will go up too high. Okay, so now we are fully convinced, and we have some very clear action together with the management here to decrease this level of inventories. And that's why overall you can see the inventory days, and also the net working capital is also very high, but it will go down in H2. You can see also on the profitability ratio are going down a bit in Q2. This is just an impact of the temporary decrease of our profitability, mostly coming from the one-off. If you do remove the one-off, we are very well in track with the previous quarters. And now we let Kunjiji going through the performance by category.
Thank you very much. So I'd like to break down the business portfolio for you to help you understand. And our ambient seafood business, we continue to have 43%. Frozen and chilled seafood is 37%, and pet care and value added and others has increased to 20%. And if we break down by brand and OEM, the OEM part, the contribution has grown by 58% to 61% this year, mostly from pet care and value added, which has seen significant growth. And our new businesses down towards the bottom, we have ingredient supplements and alternative protein. As Mr. Tirupong mentioned earlier, we are continuing to target these business to have to achieve our 2025 goals. If we compare the past 3 years, you'll see that we have robust growth in all of our businesses. The ambient seafood has grown by 1.3% over the 2 years. Last year was 12%, because in 2020, people had stocked up during the first wave of COVID, which caused the high base for us. And we're still seeing great growth despite this. In frozen and chilled seafood, last year it was 23.1% for frozen and chilled seafood, and has grown since last year as well. And this is high base. As Mr. Tirupong mentioned, last year in the US market, the food service market improved after the country opened. And in terms of pet care, as you can see, we're seeing a significant growth of 56.7% over the past 2 years, and also better growth from last year as well. And this is because of the selling prices and an increased volume for sales thanks to higher demand. If we look at the overall picture, we have an all-time high for our sales for the second quarter and for the first half as well. It's grown by 17.2% compared to last year. And our gross profit margin is at 17.2% for the first half. So if we take our one-off items out, it'll be 17.4%, which is in line with our guidance. Now let's talk about our ambient seafood. As I mentioned, the growth this year is very good. It's grown by 10.7% year on year, even though we have increased the selling prices, and this might have helped, but demand is also strong, and our sales volume has increased by 1.6% year on year, and the selling prices have increased. We have our favorable FX, and the adjusted GPM is 19.5% due to a one-off item where we closed the Rügen fish factory. And if we adjust it, it'll be 20.5% if we adjust for those items. And here's the first half results. Very strong results as well. On the same trend, we continue to expand in terms of automation and inventory management. We have a new cold storage project in Ghana, and this will help us manage our inventory in terms of tuna and help us reduce our costs as well. And this is on track, and we will commercialize in the first half of next year. As for our frozen and chilled seafood, this year there's a bit of a decline compared to last year. It's gone down by 6.5% year on year because there was exceptional performance last year. The volume has dropped a bit, and the frozen business in Thailand still continues to be strong, and the salmon business and the feed business have dropped a bit. In terms of our gross profit margin, as Khun Ludovic mentioned, our strategy is to adjust the prices in the second half of this year, and this will improve our margin in the second half of this year. If we look at the first half, our sales continue to grow at 2.8% year on year, and our margin is in line compared to last year, which was an exceptional year, and we still continue to grow, whether it's in terms of Q-Fresh or Thamachat seafood. We're going to focus more on Thailand and our regional market. We have a culinary project which Khun Tirapong mentioned as well, and that is also on track. And these will help us improve our capacity by 38%, and our key products will be high-value products, ready-to-eat items, dim sum, and bakery items. And lastly, our pet care value added and others. You can see that the growth was exceptional at 41.7% year on year, mostly thanks to the higher selling prices and the favorable FX. So we've seen growth in both pet care, our pet care sector, and value-added segment. And the margin is at 29.2%. And if we take a look at the ambient and value-added businesses, if we exclude the one-off items, you'll see that our gross profit margin is at 29.5%, which is still high compared to the previous years, except for the second quarter of last year. And the first half pet care value-added performance was also in line. Sales grew 35% year on year. We have a story. We're going in terms of our listing of ITC, and we continue to be determined to expand our markets abroad in terms of mostly the canning business, as Mr. Terapol mentioned, and we have our value-added products. We're building facilities for our protein hydrolysate and collagen peptide. Everything is on track, and we expect to be able to produce in the beginning of next year as well. And let's take a look at pet care a bit. Why do we believe that this is a growth opportunity that is a significant one? And it's because there is demand that continues to increase. The growth has been very exceptional. CAGR was 5% or so, but from 2021 to 2026, we expect a CAGR of 7.1%, and this has allowed us to grow quickly. Right now, we are number 2 in Asia, and we are one of the top 10 producers in the world. In terms of our strategy, the key ones are we have our in-house R&D, which will continue to work with our customers in terms of procreation products. We want to be OEM rather than launch our own brands. And the second strength is the benefits that we get from our raw materials, that we can cooperate with other partners. Our raw materials are tuna and chicken. And the third is the effective packaging costs. In the future, our partners are giving importance to sustainable packaging, and we are planning to enter that market as well. So you'll see that growth opportunities are high for the pet food industry. And people treat their pets as family members, and the spending for pets is therefore increasing and continues to increase. And we see the opportunity for premium products. And we are experts in wet food. And this is better. The growth in this area is even better than the whole market itself. And these are the revenue components. It's mostly from our foreign exchange or FX. We have 1.1 billion baht in gains from this. And in our pet care and value add have grown. And in terms of ambient, every product has grown as well, whether it's tuna, sardine, or mackerel, or salmon. And in terms of frozen, salmon frozen has gone down a bit. As you can see on the right, frozen and chilled grew significantly. And this is the last page. I would like to invite Ludovic to provide guidance.
Thanks a lot, Gigi. And you can see here our updated guidance for the full year. So we did increase our guidance on the top line. I think our Q2 performance was a bit higher compared to expectation. So last time at the end of Q1, we told you the growth for the full year will be between 7 to 8%. So we do increase this one to 10 to 12% for the full year. After 6 months, we are a bit higher than 12%, I think 12.3%. So it means that in H2, we still plan to grow a lot, but a bit lower compared to H1. And I think the FX impact will be also lower in H2. There is no change in our GP margin and our SG&A percentage also on the GP margin. Right now, after 6 months, we are slightly below. We are at 17.2. Keep in mind, we had the one-off. If you do remove the one-off, we had 17.4. So we are very close to our full year guidance. SG&A percentage, right now, we are at 12.8%. So we do expect to have some drop happening in Q3 and also in Q4. Interest rate, dividend policy, we don't change anything. Maybe one last word regarding the capex. For the time being, we maintain our guidance at 6 billion baht, but we are a bit below our plan on this one. We will see in Q3. Normally, we have some large spending to happen in Q3. We may have to revise this one down a bit in Q3. We have a bit of headroom on this one. But overall, just to tell you that we feel very confident and very comfortable also with this performance in such a context. And now we'll let maybe Khun Chirapong to conclude the session.
As you can see, there aren't many times that we adjust our sales figures up. The overall picture for the market is a good one, and we are confident that our sales will be more than 10%. There are only a few more months left before we end the year, and we're confident that our revenue for this year will have good results. There are many things that have helped us achieve good results. The competition is not so intense, and this is perhaps from our ability to export. During the COVID pandemic, customers have been very confident in Thai Union, and in Thailand, the geopolitics also helps. We have demand from China as well, and the foreign exchange in terms of the Thai baht competition is good as well. Raw materials are not, that situation is not very volatile. It's steadier. So we've been able to manage things well. We're managing our finance costs, our investment costs, and our scale is also favorable, especially in Thailand. We've invested in automation over the many past years, and we are seeing the results of that investment. We've reduced the number of employees continuously. Many people ask about the increasing labor costs. I think that increasing labor costs is not that significant. If we are able to manage the freight costs that increase 4 or 5 times, if labor costs increase by 8 to 10%, then that won't affect us that much. So you can rest assured we have predicted even higher increase in labor costs. So if it goes up to about 8 to 10%, then it's manageable for us. And Red Lobster is going to be opening at Soon Silikit here in Thailand, and we hope to invite all of you to visit the restaurant for a taste.
And now moving on to Q&A. As usual, we give the priority through the questions from participants in the hall, and then we'll follow by the online participants. So please raise your hand and our team will get to you. Thank you.
สวัสดีค่ะคุณธีรพงศ์คำถาม
Hello, Kun Tirapong. Everything that you've discussed for Thai Union, the trigger point is Red Lobster, its recovery. And we're very happy that you had the chance to go to America and you saw so much. And that was important. That was an important development for you. And when you were there and what you saw, all the things that you're adding into the business, you'll see the results. When do you think you will see significant results? When will you see significant an improvement in terms of loss? We expect a major improvement in the next 12 months. The next 12 months are very important, and it will prove whether we're doing a good job in terms of managing or not. We want to see a clear turnaround, especially on the 7th of this month, we should see an improvement. And before that, the food costs were up at 38%. That's too high of a cost. It should be about 32%. And I believe that we don't the food cost to come down to 32% right now, but we hope to see it at 35%. And what we're doing right now may not be what foreigners or Westerners like. They like to have lots of advertisements, commercials, because they want people to flock to the restaurants. But we're giving more importance to the quality and the service. But Red Lobster has had trouble retaining its guest numbers. And what we're doing today might take more time than their old methods. We believe that it all comes down to the basics. Customers have to come and be satisfied with what they see and return because of their satisfaction. So please just continue to follow what we're doing, and I promise you, I believe we will see things turn around within 12 months' time. You don't have to put anything in the reports just yet. You should have to wait and see. I have another question. I asked Ludo, but he wouldn't answer me. This year, you've given guidance in terms of operations for Red Lobster that is going to have a loss of 950 million or billion. This is an increase from 400 or so billion or million. For next year, what do you think the numbers will be? It's going to improve. Maybe, can you achieve maybe a 50% improvement? Let's be conservative first. Red Lobster, just put it aside for now. There are no problems, don't worry. But no, we can't. That's the trigger point. For myself, I believe the trigger point is Red Lobster. We need a Red Lobster turnaround. Everything else you've done well, but with Red Lobster, this is I need to tell you that the reason why it has not improved just yet is because before this, the Golden Gate was managing Red Lobster. We were the minority shareholder. We did not have the authority to step in. That was the agreement we had with them before. And after that, because of COVID, we had our first opportunity to actually go in and take a stance. It was last year that Golden Gate stopped. So we wasted another 8 months because we had a new CEO who did not do what we expected her to. And then she resigned. And this was the first time that I and my team were able to go in. And I'm telling you honestly, we have managed businesses in the U.S. for more than 20 years, but the corporate culture in the U.S., in America, it is something that it was eye-opening for us about the corporate culture in America, whether their way of providing information. I'm not saying that they did give us false information, but they gave us information that was distorted. It wasn't the actual truth. And so we went and we achieved transparency in the organization. We wanted everyone to know the facts. Before that, the Westerners were taking care of it. All they cared about was the EBITDA. We also told them that they need to know about the net income. All of the managers now know about the net income. How can executives not let their managers know about the operating results or the earnings results? But today we've gone in, we are giving information to the people who need the information. So 6 to 12 months from now, let's revisit this issue. And Ludo cannot give you numbers right now, but that's because we don't want to give you numbers that we're not confident in yet. So that's it for now. Hello. I'd like to ask about after Rügen Fish, after managing that, are there other businesses that you see also are not doing very well that you need to restructure as well? Today, if you take a look at our factories, we've reduced the number of factories that we have. I don't think there is any other factory that we have to be concerned about, or any business that we need to be concerned about at the moment. We've handled everything that needs to be dealt with. If you take a look at our factories in Europe, we have that one in Poland, and in Germany there's only one more left. In Portugal, In Brittany and France, we have one. We can't close that one because of the law. That's impossible. Even if we wanted to close it, we couldn't because we legally can't. And in Ghana and Seychelles, it's very clear that that's important for us. That's why we built a new factory with cold storage in Ghana. We have new cold storage in Ghana and Seychelles. So please rest assured that there aren't any other businesses that we feel that we have to deal with or divest. Another question is about the new businesses, Cvita, for instance. Can you share the numbers for sales? What are the sales like right now? What's the revenue like right now? Cvita, as we mentioned, this year, it's about 200 million baht, and our target is 1 billion in 2025 or faster, and our gross margin is about a certain target. Whenever this is FMCG that we have to invest in terms, we have to have investment in terms of commercials or advertising. And if our sales get up to 1 billion baht, then this business will have potential. Look at the other businesses that you're covering that have business in supplements. We are ready to spin off this company to be listed on the stock exchange when the time is right. So that means that Cvita is not producing profit just yet, right? Is it? No, of course not. So what do the sales have to be to achieve profit?
I think the topic is the marketing investment we are doing on the Cvita. Okay, Cvita is a new brand, and we have to support this one. So for the next 2-3 years, we will invest massively on the marketing costs. So yes, at the beginning, the first 2-3 years, we will generate some operating losses. This is expected. If we want to bring the business to 1 billion baht in terms of top line, we need to have during the first 2-3 years this kind of investment. And then after, by 2024, 2025, we will be break-even and then becoming positive on this one. This is our plan from the beginning.
So if that is the case, then on slide 36, can we take a look at the numbers on slide 36? In the two other business, ingredients and alternative protein, what about those businesses? What are the sales like, and what are your goals? For ingredients and alternative protein, these are businesses that we don't need to invest in advertising. They are B2B businesses for us. And in terms of ingredients, we're not seeing significant growth yet in the sales.
I think we have something around 400 in that the ingredients. We have different components on this one. We have the factory in Thailand, there is a factory in Germany. So the scope is increasing year on year. And there will be also the new protein factory growing also and being in operation starting next year.
These new businesses, I want you to just follow the sales. If the sales grow according to our plan, then there won't be any problems.
Can I catch you? The first one ingredient, the sales is 400.
That's correct.
400 in year 2021.
22.
Our target.
Yes.
So the target to be 1,000 as well.
1 billion.
1 billion as well.
1 billion, yes. Close to 1 billion, a bit less than 1 billion.
What is the normalized and the normal gross margin of this business?
We don't provide, it's far away from the Cvita one.
Is it similar to supplement, or is similar to the...
No, it's far away from supplement business, because supplement business, it's FMCG. And then below this one, you have a lot of marketing activities. Here, it's B2B business. So in terms of profitability, it's more profitable than our usual business. But it's far away from the one we have in the supplement business.
So it may be similar to some kind of the above product, like 20% gross margin?
Plus, 20 plus, I would say, yes.
And alternative protein, do you have any idea about the numbers?
Yeah, I think we don't share. It's small, it's growing. Okay, quarter after quarter. On this one, we started really. We are already in the AP since a few years, but it was very small. So the idea is really how to scale up this business. We start from a small basis. We don't share any details specifically on AP, but the idea is really to scale up on this one.
But very simple. Whatever we do, new business must be 20 plus. We don't do anything below 20. So, and you also cover many other companies who claim to do alternative protein, right? So I think about the same. Yeah.
แต่ว่าโดยส่วนใหญ่
But mostly, these businesses, you have break even in 3 years' time, right? For alternative protein, it's easier because we use the facilities where we produce our ambient seafood and frozen seafood. So in terms of investment in that regard, in production, is not very high because we don't need to build a factory specifically for these products. And what about their ITL that's going to be listed? Is it only pet care, 100%? Yes, it's only 100% pet food. The reason why we're going to spin off is to allow this company to be one single company in Thailand that is doing only 100% pet care. Are there online questions? I'd like to ask about Red Lobster. If 12 months from now it has not improved as you expected to, will you consider exiting from that business? Or do you have a timeline for how long? If it doesn't improve, when you will take action? I think every option is under consideration, whether it's being a partner or whatever. We continue to consider the options. If there are any questions from the Zoom meeting, the question is, if the labor cost is 10%, so what is the freight cost for SG&A? The logistics costs have a bigger effect than the labor costs.
Sorry, I'm not sure to understand. Can you repeat again?
So if labor cost is around 10%, how much is the logistics cost in terms of cost of goods sold or SG&A to sales?
So we have a portion of our logistic costs which are in our cost of sales, and another portion which is in the SG&A. And we have seen here the impact in terms of price increase on these logistic costs. We have some what we call inbound and then outbound costs, which are split between the two, and the amount we are providing here is the price impact from the freight cost increase. In terms of percentage, I don't have it exactly in mind. We can share that after.
The logistics is SG&A.
Correct. We have
SG&A ถูกไหมซึ่งวันนี้มันอยู่ประมาณ
SG&A today is about 12 or so percent, so it's in there. But the advantage of our being OEM is the freight costs. We add them back into the selling price, so it doesn't affect us.
Can you just clarify on the labor in terms of percentage to cost of goods sold? Is it 10%? Is this correct?
I'd like to add more information. Right now, the labor costs are about 5.5% of cost of goods sold. Is not as significant as you thought it was. It's only 5.5%. Thank you. The next question. The margin for pet care is improved thanks to what? And the raw materials cost for pet food is how much has that increased?
I think you have seen the top line in the pet care and value added was extremely high in Q2. So here the efficiency of our factory was also very high. So the demand is very strong. I think we have seen also at the end of March some of the volumes being delayed to Q2. So overall the efficiency has been improving in Q2, and this is why the gross profit is improving. We are deteriorating a bit compared to last year because last year we were also benefiting from high margin from our packaging business. The packaging business now is facing with a bit of inflation.
No further questions from the online. So as there's no further questions, before you're going on to your break, we also come bearing gift for alternative protein. So for those of you who missed the opportunity to taste our dumpling, we have some more for you. This is your second chance. And if you have tried and you liked it, we have also some for you to share with your loved ones. And additionally, your voice and your opinion matters to us. So please take a few seconds and complete the questionnaire. You can find the QR code in your package or can ask our staff to, do the questionnaire and let us know your thoughts, and then we can cater to your needs. So we have 15 minutes break now, and then it will follow by TFM announcements and lunch with our executives. As for me, I'll see you next quarter. Bye-bye.
ขอบคุณนะครับ
Thank you. Thank you, everyone.
ขอบคุณค่ะ